Hi, all. Good afternoon from San Francisco. This is John Heerdink. I'm the managing member of Tribe Public. Many of you know me, and if you don't, good to meet you. Thanks for joining the Tribe. Thanks for joining me today. We did a quick turnaround today when was following up with Phil and with the turn of events and the talk of a silver squeeze and pretty much across all mainstream and Reddit, et cetera. All of this has been flying around, and I'm so happy to be able to get Phillips Baker Jr. here, the CEO, president CEO of Hecla Mining Company, symbol on the New York Stock Exchange, HL. Company been around for 100 plus years, 50 plus on the New York Stock Exchange. These guys know silver. Phil knows silver, and I'm excited to have this discussion with you. A reminder here, guys, is that this is not just about the questions I have, it's about the questions you have. So please feel free to shoot over through the Zoom chat feature. Questions throughout this discussion will be done in no more than 30 minutes. And hopefully we'll learn a lot today. And again, thank you, Phil, for joining. Maybe start with telling us a few things about yourself, and then we'll get started.
Well, I'm speaking to you from my office in Coeur d'Alene, Idaho, really the gateway to the Silver Valley. And so it's good to be with you, and I've done a couple of these with John, and I appreciate very much you guys joining. And I'm only going to make a few comments because I really would like to answer your questions that you might have about, what's going on in the silver market. It's gotten more attention in the last, 3 days than probably it's gotten in, or I guess 5 days, than probably it's gotten in the last 5 years. And so I thought it would be, when John suggested we do something, I thought it would be good to do this sort of format where we give you the chance to ask me questions. So please do that. Let me tell you just a little bit about myself. I've been in the mining business for 35 years now. And I've been the CEO of Hecla for the past 20 years or 18 years. I've been with Hecla for 20 years. And, I've been very fortunate in that I've worked for 3 companies in the industry, and all 3 companies have had some very good, strong assets, but particularly Hecla. Hecla has the largest silver mines in the world. 2 of our mines, the mine in Alaska, the mine in Idaho, are mines that have been in operation for a number of decades. The mine in Alaska, Greens Creek, for 30 years, the mine in Idaho for 75 years. And as a result of that, we are the largest silver producer in the U.S. And we, in fact, produce a third of all the silver that's produced in the United States. And so as a result, we are quite committed to silver and trying to understand what goes on in the silver market. Let me give you a little bit of a context as to what's happened over the last few days. The first thing I'll say is that we are in an environment where the future of silver is unlike its future anytime in the history of mankind. Now, that's a pretty bold statement to make. But if you look at the first, I'd say 6,000 years, silver was primarily a monetary metal. And about the last 150 years, there's been a demonetization that's occurred with silver. And as that was demonetized, the other use of silver, photographic use of silver, also started to disappear. So we've had this trough. I remember in 2002, I was speaking with a money manager from JP Morgan in London, and he was insisting that Hecla sell our silver assets and focus only on our gold assets. And I just told him that's not going to happen. And the reason he was saying that was because of this digitization that was occurring. And what he didn't appreciate, nor did I, was the unique characteristics that silver has in our economy And at that time it was, you know, had those digital photographs. To do those photographs, you had to have a camera that was going to have a little bit of silver in it. And so what's happened over the course of the last really 70 years is silver has moved from being primarily a monetary metal to being not only a monetary metal, but to also being an industrial metal, and a metal that is going to, and the future of it is going to change, because it's going to be even more central to the decarbonization of our economy as we move from oil and move into renewables. Silver is right there because of its unique characteristics. And you're not going to see those characteristics in any other metal. You know, it's the most conductive metal, more conductive than copper. It has less resistivity than copper. It is very, very unique. And so as a result of that, we've got this, and I'm going to show you a slide. I have one slide that I'll show you. Let me pull it up. So John, you should be able to see this slide now.
Looks great.
And what this slide shows is, you know, this split between the demand for silver, and it really falls into three categories: industrial, investment, and jewelry and silverware. And if you look at that industrial demand, what you can see is electronics makes up almost 60% of that. And that's going to grow. And it's going to grow because of more photovoltaic demand, more demand for electric vehicles, and also this 5G. You take those three components and what you see is silver. You know, those three components make up about 2/3 of this electronic piece, and that's growing because in electric vehicles, you use about 3.5 times more silver than you do in a conventional car. So we're in this environment where you have this monetary demand and you have this industrial demand. And as a result of that, you look at the price of silver and you say, geez, shouldn't it be higher? Because on a monetary side, you've got gold that is near its all-time high, and you've got silver that's only halfway to its all-time highs. The high for silver is $50. So the expectation is that we're going to see gold, there's silver catch up to gold. And in fact, that has started to happen over the last 18 months. Much better performance of silver over gold. And on the industrial side, I think there's going to be more realization of the need for silver in this decarbonization that occurs. So what does all this have to do with the silver squeeze? Well, when I look at the silver squeeze and the idea of trying to squeeze out shorts, that's a very unlikely strategy for investors to take. And the reason I say that is because it's a very, very deep market. It's very large, and there's circuit breakers that were put in place back when the Hunts tried to take over the silver market. And in fact, you saw the CME actually increase the requirement for putting up collateral by 18% just last night. And so as a result of that, it makes it very, very difficult to have a squeeze of the silver market, with one exception. And that exception is the fundamental demand, both investor and industrial. And as that occurs, there is the requirement of more physical silver. So this market is a 1 billion ounce market, and it's growing. And it's that growth in the demand for silver that really causes this squeeze to occur that the financial market has to deal with. And so, John, that gives a few comments. Let me stop there, and there's more that I can say, but let me stop there and see if you have questions or any of the tribe.
Well, that's all very interesting. Actually, you brought up the hunts. Can you give that historical, that story? I don't know if a lot of folks know that.
Well, you had the Hunt brothers who made the determination in the late 70s that they could actually corner the silver market. And they, in fact did. There was a change in the rules that occurred where they had to put up more collateral. And when that occurred, then you basically saw the same thing that you've seen with GameStop stop, and you saw with silver last night, where you don't have the financial resources to maintain that position. So the price of silver went way up, hit that sort of $50 level, and it came down very, very fast.
It's interesting you mentioned the $50 level. That's what it hit again in, I believe, 2011. It was in that $50 range before it came back down. Can you speak to why was that a squeeze? What were the market forces that sort of moved silver at that point?
No, it really was not a squeeze. It really was a function of silver following gold. Gold also reached highs. And as the gold price goes up and the silver price follows, what ends up happening is that gold silver ratio squeezes down. And typically when you have a robust growing gold market and silver market, you'll see that that ratio between gold and silver get to somewhere in the 40 range or better. Currently, that ratio is around 60, 65, maybe even now back up to 68. And so there's lots of room for silver to run relative to gold. But it takes a market where both metals are moving to get it into those sorts of levels. And of course, gold has been somewhat stagnant, which is not surprising. Realize that gold really moves when the steps that governments take to juice their economy starts to be realized. So, if you think about all of the investment that's been, I say investment, that's not the right word, the monetary stimulus, the fiscal stimulus that has occurred over the course of the last, not just this past year, but the last sort of 5 years. It's incredible the amount of stimulus that has occurred. What that does is set things up for the gold price to move when the economy really starts to move. And so I think you can expect to see that velocity of money happen. You think about the stimulus, the money that people have gotten, lots of that has just gone into savings accounts and investments. People have not spent it. Well, when they start spending it, that velocity increases. And when that increases, that's when gold price really moves, and silver will move even further.
Speaking of, sorry, I'm losing my voice today. It's been a long day, but is there a risk of now or eventually of any the supply of physical delivery coming into question or being challenged?
Yeah. So you have different types of silver products. You have the silver that's used for the industrial uses. You have the silver that is used for the COMEX and for investment, which are 1,000-ounce bars and 100-ounce bars. And then you have the silver that comes in the form of silver single-ounce rounds or coins. And that's actually what we ran out of over the last couple of days. And if you continue to have that sort of demand occur at the retail level, what ends up happening is the other metals, and particularly the silver bars, get melted down and turn into the coins. And what does that do? That puts pressure on the financial market, and that's really ultimately the squeeze of silver is when you have enough demand by individuals that pushes that market.
Okay. I think this specifically towards Hecla, but the question is, can you talk about your silver inventory and any options, futures you might have against it? For instance, how much have you sold? At what price would you consider further forward sales?
Well, we don't hedge our precious metals exposure except when we recognizing revenue to put it on a ship to be smelted. So when we make our product, we ship it, we then hedge that exposure. Otherwise, we don't hedge. We do hedge our base metals exposure. We like to have this visibility of the cash flow that we get from our base metals, and we try to do a year to 2 years of hedging of the base metals. But precious metals we don't hedge other than basically a month. This stuff gets priced over a month.
Got it. Okay. Fair enough. One of the other questions is, do you see that this is more the stock market related question, if you want to feel comfortable commenting, says, do you see increased retail involvement in the stock market around silver as being impactful to the long-term bullish sentiment or otherwise?
Yeah, I view it as very bullish because silver is a retail oriented metal. There is a strong following in the retail market for people interested in silver, and what this Reddit thing has done, has put a spotlight on silver that it's not had before. Mm-hmm. And I'm one of I'm on the executive committee of the Silver Institute, and I was talking to the executive director, and he said that the number of requests that they've had for information has been more than they've been able to handle over the course of the last week. Lots of those people come from the sort of the Reddit side of things. Lots of the people just come because they're being introduced to silver in a way that they haven't been introduced before. So I think the outlook looks very good, with more retail investor interest in general. And as they have that general interest, they realize, they're not exposed to silver. You turn on the TV, there's not a whole lot of information that's specific about particularly silver, more about gold, but not so much about silver. And as people see that information, their interests are increased. And as a result, we see more following. And that's happened over the course of the last 18 months as the price of silver has risen relative to gold.
Fair enough. Speaking of its uses, and reflecting back to your slide here, for instance, in a Tesla vehicle, what are the uses there? Where is it used? How much is used in a typical vehicle? Why is it used? Again, I think you spoke to that, the why a little bit, but maybe can you talk to how can people start to frame an understanding around this demand?
Well, it's the demand is about 65 million ounces of silver currently. And the expectation is, as we go from these conventional vehicles, internal combustion engine to electric, that requirement increases 3.5 times. So when you think about that we're talking about a 1 billion ounce market. That's a huge increase in the demand for silver. And
then the demand, the idea is that the price would follow to some degree as this demand increases. Or
so on the supply side, you don't have new mines. Realize that today, for every ounce of gold that's produced, there's only 8 ounces of silver. So so it's rarer if you think about it this way on it. You think about what the price difference is. Silver is actually rarer than gold. So the pressure on price we think will be dramatic. And it's going to happen over time. Look, Hecla is a 130-year-old company. I've been with the company for 20 years. We're very patient. We recognize that the silver market is ever evolving. You know, the price of silver today is 5 times what it was when I had that conversation with that money manager in London 20 years ago. And we think it's going to continue to rise for both the reasons of the demand for industrial use as well as those monetary reasons.
Got it. Speaking of supply again, there's a question says the supply demand deficit you described has been discussed for some time. What do you think will finally cause this price to reflect this? And what about the conspiracy theory of special interest wanting to keep the price of silver in check vis-a-vis shorting or otherwise? Any thoughts around that?
Well, you know, it's interesting with silver, there has always been a bit of a conspiracy view that people have had. So when I got involved, the view was that Kodak was, and other Fuji and other filmmakers were causing the silver price to be restricted. And I wouldn't be surprised, you know, today if there's other people that think that there's other folks on the other side on the use of silver that could be trying to constrict it. The difference today than what you had back then, which I think there was some validity to what was what people said about Kodak and Fuji and other silver users. Today, you've got such a broad swath of users, and the amount that's used in any one application is so small. So I think it's really hard for someone to be on the other side that's driving it. The people in the middle, I'm not sure what the reason they would have for being part of some sort of conspiracy. So while it's possible, don't know why that would occur. And, you know, frankly, there's not much that I can do about it other than be the low cost producer, have mines that are in the best jurisdictions, and have long lived mines, because, you know, people are not able to maintain if there's a lie, they're not able to maintain that lie forever. So we'll wait them out.
Got it. Thank you. Here's another question. And again, remember everybody, thanks for sending in some of the questions you have. This is, please continue to forward those through the chat feature here for Phil to address here. Dr. Wood here, he's asking, an investor in the silver ETF, silver SLV, only owns shares in a trust that owns the physical silver. This investor does not actually have a claim to the silver in the trust. So if there is a lot of fast money quickly coming into the ETF that may bail out a short period of time, can the ETF just use the fast money to buy silver long contracts on COMEX and take delivery after the market calms down, thereby not having to go to the general market to buy physical silver?
You know, we don't have that transparency to know how they can do that. You know, I certainly would encourage investors that have the appetite to own physical to do that. You know, I think in the long term, you know, I'll give you an example. Yesterday, I went on some different sites to see what is the price of buying a silver round, and it was $60. You know, and this is an ounce of silver whose market value is only $30. That doesn't always happen. That happened yesterday. Typically, you would have a premium that would be sort of 15 to 20%. So it's unusual. So if you can, in the right times, buy physical silver, you know, I think you're well served in doing that, as well as buying, you know, silver companies, as well as buying the ETF. I mean, it's all good. You know, I think over the long haul, you're going to be well served by making all of those.
Fair enough. Question specifically for Hecla. You have a dividend in place. Can you speak to that? You've made some changes to it, increased it. Can you speak to how that works today?
Sure. So we put in place our dividend in 2013, I believe. And we've been continually paying that dividend ever since. But we also put in place when we established the dividend, a special dividend that is tied to the price of silver. And just recently, we increased both the base dividend, we increased that by 50%, and we lowered the trigger when we pay the silver dividend. And that trigger now is $25, and it's 2 cents a share. So the base dividend is 1.5 cents per share annualized in both cases. So it's a significant increase in the dividend for shareholders. And our view is we're giving shareholders something that they can't get when they buy the physical or when they buy the ETF. That's part of the reason to also buy a mining company, and particularly Hecla, because we do also give you this return, and it's an ever increasing return as that dividend, the silver price increases and the dividend increases. So we think it's, and nobody else has it. We think makes it a unique reason to invest in Hecla.
Fair enough. Here's one that just came in. It says, you mentioned on CNBC earlier today that 30% of silver production is a byproduct of resource mining. Is there a good case to be made that there will be aggressive M&A by majors such as yourself to acquire prospective properties, companies that are purely focused on silver?
Well, yeah, it's actually 60% of the silver production comes from byproduct credits of base metals, gold companies, gold properties. As far as acquiring new assets, the answer is there's not many of them. There's not many base metals companies and assets, mines that have a good amount of silver in them, nor has there been much exploration for silver. So there's not very many attractive silver companies to acquire, silver properties to acquire. That's one of the reasons why I think the long-term outlook for silver is so good.
That makes sense. What do you see happening? We've had this volatile couple days, pull back around, and what do you see in your crystal ball, if you will, over the next year? I know we're talking about long term. Do you mind quantifying that in any way? Or?
Well, look, there's every reason as the pandemic ends to see the economic activities increase dramatically. And that has two effects on silver. One is the industrial demand is going to increase as the activity increases, as people invest in infrastructure, more 5G. 5G is now consuming about 6 million ounces a year. It's going to continue to grow. So that's one aspect. The other aspect is the monetary aspect. As you have that economic activity and you have the velocity of money increase, you will see precious metals increase. So, what do I see in a year's time? I couldn't tell you what it's going to be. My expectation is it will be higher. If it's not, Hecla is well situated to be able to manage through that and thrive. If it is, we're generating, for every ounce we produce, call it $10 an ounce of free cash flow today at $25 silver. So we've got, we're generating a lot of free cash now. We're increasing our dividends. There'll be money that will come back to shareholders, and they'll also take advantage of that higher silver price that will be reflected in our share price.
So if I'm hearing you right, you're saying that your average cost across all mines is around $10. Is that what?
About $15.
15, yes, $10. Sorry, do the math there. Thanks for clarifying. And I think if there's not any more questions, I think we're right at the 30-minute mark. I want to allow you to, sort of sum up anything you'd like to share with us or anything else you might point towards us, and invite you again to come back on soon as you move forward. I believe your earnings are on the 18th. So keep that in mind, everyone. And, thank you for joining us today.
Well, John, I appreciate having the opportunity. Our earnings are on the 18th. That's the reason why I didn't talk to any degree about the company.
Mhm.
I think you can participate on that call through our website, and we'll also try to have an opportunity to have investors have the opportunity to do one-on-one calls with some of our executives and give you the chance to ask specific questions that you might have. So look for that and look for the opportunity to participate in that.
Okay.
And certainly after the earnings, we'd be happy to answer any questions that folks might have. You can certainly call or email me and my team, and we'll get back to you. So thanks very much.
Thank you. There's one that came in here. Maybe you'll address this on the 18th, but one last question says, will there be any update coming on the drilling results gold resource on your Republic Washington State project? And what are you going to do with this project?
There's a member of the tribe that is in Republic or area, I suspect. The answer is there's been no recent drilling, in the course of the last 4 months on Republic, but rest assured, it's an important asset to us. It will have its day. It's just that we've got some other priorities at the moment.
Gotcha. And one last question, sorry, is in regards to exploration in space, Mars, all of this, new developments. Is there the argument for uses there? Are you seeing that demand yet? Is, with SpaceX and everything going up, do you see demand coming from in silver there?
Yeah, look, anything that uses electricity uses silver.
Okay.
If you need any reliability, if you need to have high conductivity, you need to have low rate resistivity, then you've got to use silver. So yes, it's very, very small amounts spread across thousands of applications. So it's actually the thrifting of it is very minimal. The future in all of these different applications is really, really good.
Got it. Thank you. Well, thanks again, Phil, for jumping on here today. We feel honored to have you on here, and thank you all, the tribe, for coming in on short notice. And we'll look to give you a little more notice last time, but I didn't want to miss this opportunity during this volatile time, if you will, around silver, an exciting time. And again, I appreciate all. If we didn't get all the questions answered today that you might have after you get off here, just send them here, and I'm sure Phil would love to address as we move forward. Thanks again. Thank you, Phil, and good luck the rest of the week.
Thanks, John. Bye.